and thank you for joining me here today. Appreciate it very much. Our first story today. Even though China's economic growth rate has slowed, the country has announced that it's beefing up its defense budget. China is going to raise the budget to more than $220 billion, which is roughly a 7% increase. And at the same time, this is only a fraction of the spending when you factor in research and development and foreign weapons. Now, China's sluggish economy seems like has not hampered its ambition at all of controlling self-governed Taiwan and its claim over the South China Sea and more. Just this week, for example, Philippine officials accused the Chinese Coast Guard of blocking one of its vessels in the South China Sea and causing a minor crash. The tension adds to the increasingly rivalry with the U.S. in all aspects. In politics, military, economics, and technology, China's defense budget, by the way, has doubled since 2015 and is the second highest only after the U.S. Now, before we move on to the next story, I'm curious as to what you think. Why is China putting hundreds of billions of dollars into military spending? What are its priorities? Let me know down below in the comments. I do read them for every episode. So our next story involves Amazon and Chinese tech giant Huawei. And it seems like the two are partnering up. The two have signed a multi-year patent licensing agreement, but most of the terms of the agreement were not disclosed, but it appears to show that the two companies will cooperate without limitations in standards and patent licensing. This is despite the U.S. actually having barred Chinese telecom companies from its markets over data concerns and have designated Huawei as a threat. Now onto Wall Street. The three major indexes all retreated more than 1% on Tuesday, with weakness in mega-cap growth companies such as Apple and the chip sector weighing most on the Nasdaq ahead of this week's crop of economic data, and as well as remarks from Federal Reserve Chair Jerome Powell. Here's a quick recap of markets.
Wall Street's main indexes dropped sharply on Tuesday, with Apple and chip stocks weighing heavily on the Nasdaq. The Dow and S&P 500 each shed 1%, and the Nasdaq plunged nearly 1.7%. Apple shares shed nearly 3% after a research report showed iPhone sales in China fell 24% year over year in the first 6 weeks of 2024. The drop comes amid increasing popularity for smartphones made by Chinese rival Huawei. But shares of Apple are still a good bet, says Jimmy Li, CEO of the Wealth Consulting Group.
It's a great company, right, that has incredible market share for what they do. And right now, it's underperformed the NASDAQ dramatically, and even the S&P 500 over the last 12 months, by over half, I believe, the S&P 500. And so if you're looking to get into a name like that, and if you like the company from a value perspective, you can see a little bit of value there, right? Versus maybe the ones that are trading at higher valuations and near all-time highs.
Speaking of those stocks with high valuations, the chip sector was battered after Bloomberg News reported that Advanced Micro Devices hit a roadblock in its efforts to sell an artificial intelligence chip tailored for the Chinese market as Washington cracks down on tech exports to Beijing. The Philadelphia Semiconductor Index shed 2%. On the upside, Target shares rallied 12% after the retailer forecast annual comparable sales largely above estimates, betting on same-day services, product launches, and a new membership program to boost spending. Investors now turn their attention to Federal Reserve Chair Jerome Powell, who testifies before lawmakers on Wednesday and Thursday, and the crucial non-farm payrolls report due out Friday for more clues about interest rate policy.
Now, if you're a U.S. military veteran or the family of a veteran, you'll want to hear this because major changes to VA healthcare benefits are going to kick into effect today and aim to expand access to millions of veterans. Here's what you need to know.
The Department of Veterans Affairs says millions of U.S. veterans are now eligible for VA health care earlier than anticipated.
This is the biggest expansion of VA care eligibility in generations.
It's covered by the PACT Act, which aims to expand VA benefits for service members exposed to burn pits, Agent Orange, radiation, and other toxic substances. Iraq and Afghanistan Veterans of America CEO Alison Jaslow, an Iraq War veteran, says the benefits are especially crucial to her generation of veterans when burning trash and other waste in burn pits was common practice.
In real time, we didn't know what kind of impact that would have, but I will say that most of us were thinking not necessarily cancer, but like, what is this doing to, like, if I'm breathing this in every single day?
When the PACT Act became law in August 2022, it laid out a plan to phase in eligibility for different groups of veterans until full implementation by 2032. But the VA accelerating that timeline. And all veterans exposed to toxins and other hazards while serving overseas or at home can apply for benefits now. Jaslow says getting more veterans into the VA system for proactive screenings and specialized care could save lives.
Maybe your doctor out in the civilian sector doesn't know to ask if you were even in the military, let alone exposed to toxins. And being in the care of VA practitioners is really a good thing for all generation of veterans.
Meanwhile, Target is joining the ranks of Walmart and launching its own paid membership program. And this comes after the retail giant reported the first decline in annual revenue in 7 years. Target says that last year's sales at stores that have been open for at least 1 year dropped nearly 4%. Even so, the company exceeded Wall Street's expectations for the holiday shopping season, which surged Target's stock in pre-market trading. The retailer is banking on same-day services, product launches, and its new paid membership program to grow sales this year. Now, the paid membership feature is expected to launch next month. And remember when Elon Musk said he's going to sue ChatGPT maker OpenAI? Well, the company on Tuesday refuted Musk's claims that the startup abandoned its original mission to develop artificial intelligence for the benefit of humanity and not for profit. Take a look at this.
OpenAI fired back at Elon Musk's lawsuit on Tuesday. In a blog post, the ChatGPT maker refuted Musk's claims the startup abandoned its original mission to develop artificial intelligence for the benefit of humanity and not for profit. The Microsoft-backed startup published emails with Musk, which it says reveals the billionaire entrepreneur in 2017 wanted to create a for-profit entity with OpenAI and have it merge with Tesla, using the EV maker as a cash cow. Musk then wanted majority equity, initial board control, and to be CEO of OpenAI. But OpenAI and Musk couldn't agree to the terms, as the startup felt it was against the mission for any individual to have absolute control over the firm. Musk's lawsuit last week alleged OpenAI, which he co-founded, breached its contract. He said its CEO Sam Altman and co-founder Greg Brockman originally approached him to make an open-source, non-profit company, and he alleged the startup is now, quote, focused on making money. Musk and Tesla did not immediately respond to a Reuters request for a comment on the blog. Elon Musk's lawsuit is a culmination of his long-simmering opposition to the startup. OpenAI has since become the face of generative AI, partly due to billions of dollars from its backer, Microsoft.
Now let's talk about shrinkflation. It's taking a huge bite out of bank accounts and forcing actually a beloved children's character to double up on cookies to make up the difference. What am I talking about? Cookie Monster from Sesame Street shared a quote on X saying, "Me hate shrinkflation. Me cookies are getting smaller." The Blue Monster isn't wrong, though. Labor Department data shows Oreo double stuffed chocolate sandwich cookies decreased in size from 2019 to 2023. The same can be said about cleaning products, office supplies, and more. Democratic Senator Bob Casey has introduced a bill to crack down on companies reducing product size without dropping prices. But for now, Cookie Monster said he'll just have to eat double the amount of cookies. And moving on. The buyout offer for Macy's has been raised to $6.6 billion, according to investors Ark House Management and Brigade Capital Management. And this comes after the department store chain rebuffed their prior proposal as too low. Here's more.
The battle for control of Macy's just stepped up a notch. Investors Ark House and Brigade Capital on Sunday said they had raised their offer for the department store chain. Their bid now values the company at around $6.6 billion. That's a premium of about 33% over its Friday closing price. The offer was raised after a previous bid was rejected as too low. Macy said its board would now review the new numbers. Like other legacy retailers, it has struggled to compete against younger online rivals. That has seen its share price sag and opened the door to a takeover bid. Last month, the firm forecast annual sales and profit would come in below expectations. It said it would shut around 150 stores in a bid to cut costs and revive profits. In a statement, Ark House said its bid would offer shareholders significant value and immediate liquidity. However, some analysts have questioned whether it and Brigade really have the financial muscle to pull off the deal.
And as President Joe Biden seeks re-election, his push to eliminate so-called junk fees has now turned its attention to drastically cutting late fees down. The Consumer Financial Protection Bureau has introduced a new rule that would cap most credit card late fees at $8. That's a sharp drop from the current average of $32. If the fee exceeds the new rule, banks have to explain why they are charging more. Critics argue that customers will ultimately pay more in higher interest rates and reduced access to credit card options. The U.S. Chamber of Commerce plans to file a lawsuit to prevent the federal agency from capping late fees. Meanwhile, connection could be cut for millions of Americans in a matter of months who are relying on an internet subsidy program. The Federal Communications Commission said there isn't enough funding to support the 23 million American households in the program beyond next month. The Affordable Connectivity Program provides lower-income families and people impacted by COVID-19 with $30 monthly vouchers to use toward internet services. The Commission and White House have called on Congress to extend the program, but Congress has not acted. The Commission says April will be the last month participants will get full subsidies, with partial subsidies expected in May. And Tesla's European gigafactory near Berlin halted production and was left without power after what CEO Elon Musk called an extremely dumb suspected arson attack close to the site early on Tuesday. Here's more on that.
Tesla's European gigafactory near Berlin halted production on Tuesday. It was left without power after a suspected arson attack set an electricity pylon on fire close to the site. Police said the blaze was extinguished by the fire brigade and did not spread to the Tesla site. A spokesperson for the automaker confirmed production had stopped and the site was evacuated. Local media published a letter purportedly from a far-left activist organisation called the Volcano Group. In it, they claimed responsibility for the incident and criticised Tesla and its billionaire CEO Elon Musk. The Tesla boss called the suspected attack extremely dumb. Police said they were aware of the letter and checking its authenticity. Production at the car factory is not expected to resume before next week, according to the plant's manager. He further said the suspected attack severed both power lines feeding the facility. He added the production outage will cost more than $100 million. It was the latest setback for Tesla, which has had a bumpy ride in Europe of late. It's faced union pressure for collective bargaining agreements in the Nordics. The company has also seen supply disruptions as a result of attacks on shipping in the Red Sea. Tesla's plant outside Berlin has a capacity of around 500,000 cars a year. It wants to expand to producing 1 million vehicles annually. But environmental activists have built and occupied tree houses in the forested area they expect to be cleared if the expansion goes ahead.
And gold prices have been at record highs. Some experts say it may be partially driven by momentum after speculation over a Federal Reserve pivot, possibly also due to a combination of geopolitical tensions and the risk of a pullback in equity markets. In TD Chart, Marshall has more.
Gold hit a record high on Tuesday with growing expectation of U.S. monetary easing and continued geopolitical risk. Bullion rose as much as 1.3% to $2,141 an ounce. Before appearing its gains, it beat the previous record of $2,135 set on December 4th last year. Citigroup strategists have said a possible bubble burst in U.S. tech stocks which are at their highest in 3 years, may be raising risks of pullbacks. Platinum and palladium, by stark contrast, were going in the opposite direction, down 1.4% and 1.6% respectively. Platinum is relatively cheap versus gold, but it has so far been left behind. When the start of the pandemic drove it to a record high, central banks have been net buyers of gold for 8 consecutive months, creating a strong physical demand in Asia. Chinese consumers also supported bullion during the Lunar New Year as a hedge against stock market uncertainty and real estate sector disruptions, currently going on in China. Chinese consumers also supported bullion during the Lunar New Year as a hedge against stock market uncertainty and real estate sector disruptions, currently going on in China. Sean Marshall, NTD News.
Now, director Christopher Nolan's movie Oppenheimer was hugely successful last year. But to create the look of renowned physicist J. Robert Oppenheimer for the big screen, his trademark hat had to be just right. Here's the story.
When creating the look of renowned physicist J. Robert Oppenheimer for the big screen, it was key to get his trademark hat just right. After 2 hat makers failed to replicate the scientist's unique style, Mark Mejia headed to a Hollywood studio lot to try his version on lead actor Cillian Murphy. Director Christopher Nolan joined the fitting as well.
When we met with Christopher Nolan, we actually had, the hat was already completed, and now it was just a matter of actually sitting on Cillian's head and seeing if we've actually done what we tried to do, which is capture that silhouette. And I was trying it on Cillian, and Christopher come in and put his little flair on it just to give it the attitude that he wanted, and we captured it right then and there. It was perfect.
The owner of Baron Hats has 3 decades of experience making hats by hand for A-listers, from Clint Eastwood and Leonardo DiCaprio to musicians Bob Dylan and Beyoncé.
You need to be able to have a vision, and you have to have a little bit of art in your hands to be able to kind of create something from a one-dimensional piece like a photograph or a sketch and bring that to life and actually bring it into a 3-dimensional space to make a hat that is perfect for that character.
The Oppenheimer hat was an unusual shape. Murphy wears 1 hat in the movie, reflecting the fact that Oppenheimer kept the same look throughout his life. So getting it right was important.
It's kind of a telescope crown with a brim that's a little bit up in the back, and if you see the silhouette there, that's kind of what it took. And down in the front, just ever so slightly, to not give it too much, but not too little, not to cover his face, but just to really capture the silhouette that we were trying to capture.
Oppenheimer is the frontrunner to win Best Picture at the Academy Awards.
There's a lot of gratification and satisfaction when you actually build something with your hands from scratch and see it on the big screen. There's a great satisfaction with that feeling.
Meanwhile, a South Korean zoo on Sunday threw a farewell party for Fubao, the first giant panda born in the country ahead of the animal's scheduled return to China. Here's more on that.
Remember this giant panda, who became famous after videos of her clinging to her zookeeper went viral online? Fubao, the first giant panda born in South Korea, has attracted a huge fan base ever since she was born in 2020 at a zoo just south of Seoul. Now she's set to return to China in early April. Thousands of visitors queued up in the early morning to attend the farewell event on Sunday.
We came here this morning at 5:30 and waited. This is the last chance we can see Fubao, so we came feeling regretful because we don't know when we'll see her again.
The cub's parents, female Ai Bao and male Li Bao, arrived to South Korea in 2016 from Sichuan province as part of China's panda diplomacy.
And it's not just gold. Bitcoin soared to a new record high on Tuesday, fueled by investors pouring money into U.S. spot exchange-traded crypto products and the prospect that global interest rates may fall. Here are the details.
Bitcoin soared to a record high on Tuesday, fueled by investors pouring money into newly created spot exchange-traded funds in the U.S. The world's largest cryptocurrency hit a high of $69,202, topping an all-time peak reached in November of 2021. It then moved lower later in Tuesday's session. Bitcoin's surge is driven by simple supply and demand, says Ben Laidler, global market strategist at eToro, and comes just weeks after the Securities and Exchange Commission approved 11 spot Bitcoin ETFs in late January.
And since then, those ETFs have accumulated 4% of all the Bitcoin there is in the world just in 6 weeks. Just to put that in perspective, that's proportionally about twice the size of the gold ETFs, which have been out there for a lot longer.
And it's not your typical Wall Street type who's powering the Bitcoin boom.
Your average retail investor has up to 30% of his assets invested in crypto. That's an absolutely huge number. So this is the first asset class which has developed, over time, which has been led by retail investors.
Supply of Bitcoin is limited to 21 million, of which 19 million have already been mined. That's helped drive demand, along with the prospect of the U.S. Federal Reserve cutting interest rates, which often prompts investors to divert capital into higher-yielding, volatile assets. Bitcoin is up 160% since October, with more than one-third of its rise coming in February alone. That marks a sharp contrast to 2022, when the market was beaten into an 18-month-long crypto winter, plagued by a string of high-profile corporate bankruptcies and scandal. Net flows into the 10 largest U.S. spot Bitcoin funds reached $2.17 billion last week, according to LSEG data.
And thank you very much for watching NTD Business. That's all the stories we have for you today. See you soon.